Problem 11. On 1st January 1997, X acquired on lease from Mr. Landlord certain mica fields at a minimum rent of rupees 48,000 per annum, merging into a royalty of rupee 1 per ton of mica ore raised. The short workings were recovered in the next 2 years of such short workings only. So the short workings can be recovered in the next 2 years, but there is a condition. But on condition that if full short working could not be recovered in the next year, X would lose his right to recover 50% of the unrecovered balance of short working. So we need to be careful of this condition. We will understand it better when we are doing the table. The output of the first 4 years were as follows. Prepare necessary ledger accounts in the books of X. So in the books of the lessee, X acquired from Mr. Landlord. So we have the usual columns. So the 4 years are 1997, 1998, 1999 and 2000. So the output here is 12,000, then it is 30,000, then it is 60,000 and 56,000. The royalty is rupee 1 per ton. Okay, so if it's 1 into all this, it will be the same amount. It's here it is in tons, here it is in rupees. Why is it the same? Because it's multiplied by 1. And the minimum rent is 48,000 every year. So now we start with the short workings. So in the first year we have a short working of 36,000. Okay. Since it's a short working, nothing can be recouped. We carry the entire thing forward because we have the next 2 years to recover it. So we carry the entire short working forward. We don't need to transfer anything to P&L account. The payment to landlord will be the minimum rent or actual royalty, whichever is higher. Okay. Second year again we have a short working of 18,000. Now let's just read our conditions again. They said short workings can be recovered in the next 2 years. The next 2 years would be for 1997. The short working can be recovered in 1998 and 1999. Okay, so 2 years. But 1998 there's no recovery possible because it's a short working again. There is no surplus. And the further it says further, but on condition that if full short working could not be recovered in the next year. So for example, in 1997, the full short working cannot be recovered in 1998. What happens? X would lose his right to recover 50% of the unrecovered balance of short working. So basically, since he cannot recover anything of this 36,000 in the second year, he loses the right to recover 50% of the unrecovered balance, even though he has another year. Okay, 50% he forgoes the right to recover 50% of this. So now how does that look? Because he forgoes the right, okay, 50% of this cannot be recovered at all, and hence since it cannot be recovered, 50% of 36,000 is what? Half of 36,000, 18,000 we transfer to the P&L account. 18,000 we are going to transfer to the P&L account. So how much does he have hope of recovering now from the first year? Only 18,000. Okay, so right now he can recover 18,000 from the first year plus 18,000 of the second. 18,000 of the first year plus 18,000 of the second year, which is going to be a total of 36,000. If that condition was not there, this 50% condition was not there, he would have carried forward, nothing would have been transferred to P&L account. He would have carried forward the entire 36 plus 18, which comes to 54,000. Okay, but right now, how much have we carried forward from the first year? Only 18,000, because he has foregone the right to recover the remaining 50%. That is another 18,000. Okay, so that's how I get this. So the payment to the landlord is going to be 48,000. Okay. Okay. Now we come to the third year. Now in the third year, we have a surplus of 12,000, 60 minus 48. Okay. Now what we are going to do, we are going to first try to recover the balance of the first year. Now first year, how much do we still have to recover? We still have an amount of 18,000 to recover. But how much surplus do we have? We have only 12,000. So at the most, we can recover only 12,000. So from the first year, we have to transfer how much to the P&L account? From the first year, we are going to transfer out of 18 which was left, we have recovered only 12. Okay, so basically 6,000 is going to go to the P&L account. 6,000 is going to go to the P&L account. And looking at the second year, now in the second year, they said, again reading this condition, second year for 1998, we can do the recovery in 1999 and 2000. But there is a condition, on condition that if full short working could not be recovered in the next year. So for 1998, if nothing can be recovered in this year, the full thing cannot be recovered, again he loses the right to recover 50% of the unrecovered balance. So even though he still has 2,498, he has the year 2000 to recover the short workings of 98, he still loses or he forgoes the right to recover 50% of the balance because he's not recovering anything of the second year short working in this year. Okay, so we are going to carry forward 9,000 from here. We are going to carry forward 9,000 from here. 50% he's foregone, and only 9,000. Sorry, we are going to transfer 9,000 to the PNL account, and only 9,000 will be carried forward. So 18 again, 50% is foregone. So that's why we have transferred to the PNL account. And for 9,000, we still have hope. So we are carrying it forward to recover it in the next year. So this is going to be a total of 15,000. Okay, and here the payment is going to be, even though the royalty is more than the minimum rent, we've used that 12,000 for recoupment. So we're going to pay the landlord the minimum rent. Okay, so I hope this is clear. This has happened only because of this condition. Okay, he forgoes his right to recover 50%. And in the last year, we have a surplus of 8,000. Okay, so we can, right now we have carried forward 9,000. So we can recover at the most 8,000. Nothing can be carried forward. Nothing can be carried forward because this 9,000 is of this year. So you can recover it at the most in the next 2 years. So it doesn't make sense carrying it forward. So we transfer how much to the P&L account. Out of 9,000, we were able to recover 8,000. So 1,000 goes to the P&L account. And the payment to the landlord will again be 48,000. Okay. So I hope you have understood this. So now we'll start with the ledger accounts. In the books of X, we have the royalty account, royalties account, the short working account, and the landlord account. Landlord. Okay, so in the first year, it's a situation we are doing it without minimum rent. In the first year, it's a situation where the minimum rent is more than the actual royalties. They increase royalties account debit, short working account debit to landlord. So on 31st December, yeah, on 1st January, so payable on 31st December, 31st December 1997 to landlord. We don't have a name for the landlord, so I'm going to call him landlord itself. To landlord by the actual royalties, which is 12,000. Actual royalties are 12,000. Similarly, short working, in the first year is 36,000. So in landlord account, you will have on 31st December 1997 by royalties and by short working. So by royalty is 12,000 and short working is 36,000. Next is the payment. So it's landlord account debit to bank. To bank 48,000. That's the payment that is made to the landlord. 48,000. Okay. And finally we transfer the royalties to the P&L account. P&L account debit to royalties. So in royalties it will be by P&L account. 12,000. So close the books for the first year. Here we have a total of 48,000. 48,000. Then this we will have a balance carried down by balance carried down 36,000. So if you say by balance carried down, immediately bring down the balance. 1st January 1998 to balance brought down 36,000. Okay, this closes automatically. Coming to the second year now, we have a situation wherein the minimum rent again is more than the actual royalty. Okay, again the minimum rent is more than the actual royalties, so we need to start passing the same entries again. So we have royalties account debit, short working account debit to landlord. So 31st December 1998 to landlord. How much is the royalty? 30,000. Short working is 18,000. Short working account debit to landlord. 18,000. And in landlord account we will have by royalties and by short working. That is, how much is it? 30,000 and 18,000. 30,000 and 18,000. Next is the payment, which is landlord account debit to bank. To bank, which is 48,000. Now we need to be a little careful here. Normally the last entry would be the entry where we transfer the short working to the P&L account. Okay, but we need to be a little careful here because we have a short working that is transferred to the P&L account. Normally the short working is transferred to P&L account only in the years when we start getting a surplus. But this is a slight exception because of that 50% rule. Okay, so we have an entry and it's a regular entry. It's since we are in the books of the lessee, the short working is an expense or a loss to the lessee. It comes to the debit side of the P&L account. So it's P&L account debit to short working. So in short working, we are going to have it as by P and L. And how much is being transferred? 18,000 is being transferred. 18,000 is being transferred. Okay. So, and then the last one will be transfer the royalties to the P&L. So this was an exception here. Normally we have this only in the years, even in the format or the journal entries that I've given you. You normally have this only in the situation where the actual royalty is more than the minimum rent. But this could be a rare example that we have a transfer of the short working to P&L account because of a certain condition. So by P&L account 30,000. Close this. This will tally automatically. So this is 48,000. 48 thousand. Here you will have a balance carried down by balance carried down. So the total here is 36 plus 18, 56, 54,000, 54,000. And the balance carried down will be 54 minus 18, that is 36,000. So if you see, your balance carried forward is actually 36,000 in the second. Okay, so that has to tally. So bring down the balance. First January 1999, two balance brought down 36,000. Okay, this one will automatically close. So we can now come to the third year where we have a different situation where the actual royalty is more than the minimum rent. So we go to the second set of entries. So the entries are royalty account debit to landlord account. So 31st December 1999 to landlord. The royalty is 60,000. So in landlord account it will be by royalties. There's no short working because its actual royalty is more than the minimum rent. The royalties are 60,000. Next we come to the payment, which is landlord account to bank, and in case any short working is recouped to short working, okay, which is recouped. So we have a short working that's recouped. We have a short working that's recouped. So it is landlord account to bank and we will also have two short working because there's part of it that is recouped. So to bank is 48,000. That's a payment that is made, and short working recouped is 12. Let's just check. Payment that is made is 48 and short working recouped is 12. So if you say two short working here, in short working it will be by landlord. 31st December 1999 by landlord. That is 12,000. Okay. We also have a transfer to the P&L account of 15,000. So we need to show that. Again, it's the same entry. P&L account debit to short working. So in short working, it will be by P and L. How much has been transferred to P&L account? 15,000. 15,000 has been transferred. Okay. And the last entry is transfer the royalties to the P&L account. 60,000. So close this. This will automatically tally. You have a total of 60 here. Here you'll have a balance carried down. So the total here is 36,000. So by balance carried down will be 36 minus 27, that is 9,000. Bring down the balance immediately. First January 2000, to balance brought down 9,000. This also closes. And now we come to the last year, where again we have a situation where the actual royalty is more than the minimum rent. So the same entries, royalties account debit to landlord account. to landlord account, it is 56,000. Then the same thing, payment, landlord account to bank in case any short working is recouped, and we have a short working recoup. Forgot to post this. So if we say to landlord there in landlord account, it will here be by royalties. So on 31st December 2000, by royalties, we just say it is 56,000. Then we go to the payment, landlord account to bank. To bank and to short working. So let's see how much is the payment made. The payment made in the last day is 48,000. Short working recouped is 8,000. So out of 56, 48,000 has been paid. And 8,000 has been used for recoup. Okay, so that's how this 56 should done. So if we say to short working here, in short working account it will be by landlord. By landlord 8,000. Okay. We also have a transfer to PNL account, a carry for short working transfer to PNL account. So again, it will be by PNL account. And how much is transferred? 1,000. And then transfer the royalties to the PNL account. So 56,000. That's it. The royalties account tallies. Short working account also will tally. You'll have a total of 9,000. There's nothing carried forward. If you check, there is nothing carried forward. So we're not going to have anything carried forward. 9,000. The landlord account will also tally. 56,000. 56. 56. So again, the difficulty in this problem was only in the statement. Okay, so you need to be a little careful because of that condition that we had of foregoing the right to recover 50% of the royalties.